All right. So, welcome everybody to this format that doesn't even have a name yet. We have a special guest today, David Stoddard from Aperture Finance. We met a while ago via contact to an exchange, and as many of you have probably seen, they have a CFP running currently, and they are planning to build on DeFiChain. And yeah, we are always happy to give people a platform to talk about their project and to introduce themselves, especially people that are not known in the community. And Aperture Finance is one of those cases. And we're happy to have you here, David. And maybe we start things, well, maybe also introducing Santiago. I think most people will know him. And there's nothing to say about that. My name is Ben, also from the DeFiChain Accelerator team. But without any further ado, maybe David, you introduce yourself a little bit and talk a little bit about what Aperture Finance does, what you've done in the past, what your role is in the company, and yeah, what you guys have planned. Maybe that's a good start.
Yeah, for sure. Yes, I'm McDavid. I'm the partnerships lead here at Aperture Finance. And a quick background on Aperture, and then I'll kind of get into how we were turned on to DeFiChain specifically, because that story in itself is pretty interesting. But yeah, so Aperture Finance, like the quick one-line version of what we do is we're a cross-chain marketplace for one-click, fully automated yield strategies, which are also sometimes referred to as structured products. And if that seems like too much jargon for anyone, I can kind of break it down. Basically, Aperture is our vision is to be a marketplace where users can come in and one click into a complex yield strategy. And they can one click into this strategy and it's basically set it and forget it. So they don't have to manage the strategy. You don't have to show up and like auto compound things or rebalance things. It just kind of runs on its own. And our vision is that people in the future of it will end up be able to show up with any wallet, whether it's a Metamask wallet or it's a Solana wallet or it's like an Aptos wallet or one of these new chains that's popping up, and they'd be able to one click into a strategy that's on any other chain. So that means Aperture would also handle any of the like bridging that would need to happen to get users into the strategy or consequently out of the strategy. Yeah, then a little, I guess, some background on the company itself. So the team, the core developers were all like some Chinese guys in Silicon Valley that played video games together. And they started like trading DeFi on the side. And these were like two of them were working on the same team at Google at the time. And now the CEO was at Amazon. But yeah, they basically started getting into DeFi last summer, 2021. And we're starting to play around and do some trading themselves and decided like, hey, we're developers, like we should jump on board this and see if we can build a product. And around that time, in like late summer, early fall 2021, there was tons of hype around the Terra blockchain. So that was kind of initially where the team decided they would build the first product, even though the vision always from the start was to have strategies on other chains. And yeah, there was a pretty popular YouTuber in Europe called Danku R, who came up with this delta neutral strategy that involved anchor and mirror. And I'll kind of briefly describe this strategy because it'll be relevant later on. But basically, delta neutral strategy, you're basically LPing, or as you call it, LMing, liquidity mining, a volatile token and a stable coin. And to hedge any like impermanent loss, i.e. if the volatile token drops a lot in price, or to hedge against liquidation risk, if the volatile token rises too much in price, you will basically go equally long and short on that volatile token. And this allows you, this eats into the APR of the LP or the liquidity mining strategy. But as a result, you're sort of hedged against any extreme price movements. And this is a strategy that people enter with stable coins and exit with stable coins and typically can get a pretty solid yield that is, hypothetically speaking, supposed to be pretty safe. So it's very attractive to retail and institutional investors. But yeah, so we automated this strategy on the Terra blockchain, and that launched back in March of this year, so late Q1. And just to kind of toot the horn of the team a little bit, this is a really complicated strategy. There's lots of moving parts required to basically set up the strategy. You need to be able to have an atomic transaction execute both the long and the short sale in the same block so that there's no slippage or you don't get hit with front running. And then also you need to have a controller, something that can monitor every single block, the Oracle prices that comes out volatile tokens, and that can systematically update, thousands of positions that you have on your platform, rebalance them if needed. This is a pretty complex strategy that there was at least 3 protocols on Terra that said they were going to do this and failed to do so, because of just the complexity required to launch such a strategy. We were basically one project fully dedicated to this one strategy, and that just kind of shows you how difficult these things are to launch. And that's really a result of the team, strong engineering background. They're all very senior engineers at Google. We have several winners of the Olympiad medals in like physics and also computer programming. So it's a really strong team that was able to technically pull this off. And as a result, this strategy was very popular in Terra. We got to, after launching, within 4 weeks, we hit 120 million in TVL. And then, of course, I don't need to probably fully recap this story, but everyone knows what happened to the Terra ecosystem. And as UST depegged, and we obviously saw this strategy go to zero. So we were burned super bad by what happened in Terra. The team, our own treasury was hit pretty hard by that whole collapse. So we're lucky to still be standing. But yeah, that brings us to how we got intro to DeFiChain. Basically, after the Terra collapse, we had, a few weeks where we were just kind of, it was like a fire drill managing the fallout from that. But then as we set our sights on building what was next for Aperture, we started, asking around to all our communities about what sort of strategies that we should look into. And we ended up actually running a strategy contest on the DeFi Dojo Discord. So shout out to the Calculator guy, who's another YouTuber who runs that Discord. But in that Discord, there's a lot of like really, really smart minds and DeFi people who know a lot more than I know. And yeah, out of that strategy contest, probably one of the gems, one of the winners that we was someone submitted a strategy about this chain called DeFiChain that we never heard of. And the strategy sounded really similar to the mirror strategy we built. It was synthetic stock tokens and taking a delta neutral position on the volatile stock token and basically taking advantage of the liquidity mining or the LP rewards in that ecosystem. And yeah, I remember when I first read the strategies, like, oh my God, this sounds like almost exactly like the mirror strategy. And I looked up DeFiChain. I was shocked to see that, at that time you had like $1 billion in TVL. And I was like, how have we not heard of this? This is such a huge opportunity. And yeah, so basically out of that strategy contest, we were introduced to DeFiChain. Someone laid out, basically the exact strategy we had already built on Terra and CosmWasm. And there's like basically a C++ version of this strategy that could be built on this other chain. And so, yeah, Santiago Ben, I think that was how we, initially decided to reach out.
I think it was via contact on Bitmart that said, I'm not sure how you connected to them, but he said that there's some guys that would like to meet you, and then the thing started rolling. And then I think you were very excited in the beginning, and then another DPEG started, and then you said, we cannot give this to our customers again, so let's see how this evolves. But then what I found very interesting is you actually came back, and we're still having a DPEG, and it's everybody knows that this is not an ideal situation, but you still came back, and I found this very interesting. And maybe you remember what you said, like when you said, okay, you were thinking about it and you still want to push it now, and that was very interesting for me to hear that. Um, Maybe you remember that. Maybe you can say it in your own words. Why you guys came back, actually, even though you knew that there is still a DPEG, and it was pegging at some point again, but then it was like the market was crashing again, and then it was depegging again. So maybe you say a few words about that.
Yeah, I mean, we definitely, like Ben, as you mentioned, we definitely got really spooked when DUSD depegged. Obviously, that was such, we've been burned by that very hard and very recent memory. So, initially that backed us off, but as we monitored things a little bit more, we saw that, okay, I mean, this chain clearly does not have the same kind of like death spiral capabilities that the Terra ecosystem always had. Like, this is, there's a lot more checks and balances built into DeFiChain. And as we saw things sort of like stabilize at times and then depeg again, I think we kind of came to the conclusion that this is definitely risky to enter back into another ecosystem that has a non-fully collateralized stablecoin as the main stablecoin. But it kind of looks like the community has submitted a lot of great proposals to try to get DUSD back to parity, but also we kind of under the belief that the strategy we want to build could ultimately create a lot of utility for DUSD and create a lot of like interest in the DeFi chain that maybe has been on the sidelines for a number of reasons, whether it's like the UX experience or it's the complexity needed to run any strategies. And yeah, basically by building on DeFi chain, we could actually sort of help stabilize, play a role in, repegging DUSD as well.
Yeah, I think that's definitely something we should pick up later on as well when we talk a little bit more about the technical details, how this works, because I think this is something the community is very interested in, how you can participate in helping with that, and also how the community in general benefits. As you said, we have a very strong community, and I think you already noticed that when you, you recently set up a CFP, and yeah, especially when new people come in that the community hasn't heard of, then you have to prove yourself first, and I think that's also a good thing. Yeah, we were talking about we were talking with you guys for quite some time, and we always said, like, guys, let's introduce it. This was like back when we initially started, but then it cooled down obviously because of the DPEG. But we picked this up like 2 weeks or 3 weeks ago. We are happy to give you a platform and to introduce yourself, to explain a little bit more what you've guys been doing, because I think it's a bit too far-fetched expecting from everybody in the community to make their own research. So yeah, we're happy to give you the platform here, and for everybody else that's watching, we're always happy to give anybody a platform if you're part of the community or you're not. We as the Accelerator team, we're not only seeing us as people that do PR marketing, and we also help with business development and talk to a lot of people, a lot of projects, and yeah, and give them a platform to speak out and to explain what they've done before and why they're planning to do something on DeFiChain. I think that's very valuable for our ecosystem, and we really appreciate that. So yeah, maybe Santiago, we start to talk a little bit more about the technical details and how this works, and maybe how this compares to other solutions that are already available on DeFiChain. So yeah.
Definitely. Yeah, thanks. So yeah, I think we should talk a little bit about what your current CFP is for, and also what you want to build actually on DeFiChain. I think for most people who are into DeFiChain right now, they are not really familiar with those vault strategies. I mean, there are some people who are really deep into vaults and do a lot of things manually. And we have also 2 projects around, which is the Vault Maxi and the DeFiChain Wizard. And also some people were asking, like, what are the similarities maybe between your project and those projects, and which gap are you trying to fill? And I think this is a cool thing if we pick this up. I mean, you already touched on the explanation what the delta and neutral strategy is, and you're also talking about reinvesting and vault management and all of that. Maybe you could briefly share your screen just that we scroll through the Aperture Finance page, and then you maybe just explain how that worked before on Terra, and then how that would work on DeFiChain later on. And yeah, then we can just maybe dive it and maybe demystify this a little bit, and how would that look like?
Yeah, I think that's a great idea. So I don't know how well you can see my screen at the moment, but
Perfectly well.
this is the old flow from the Terra delta neutral strategy, and there's a lot of like boxes here that you might need to stare at for like 5 minutes before they fully click. But basically, the really simple explanation is if you start with $90, you'll split that $90 into one $60 bucket and one $30 bucket. And with the $60 bucket, you use that to go and set up a collateralized debt position. So in this case, like on DeFiChain, you would put $60 as a loan, and you would mint $30 worth of, say, like synthetic Tesla stock. And then you would immediately, what you do is you would swap that synthetic Tesla stock or sell it, thus making yourself short on $30 worth of synthetic Tesla stock. And now you would also have $30 worth of DUSD, or in the case of the Terra strategy, we had UST. And so that's your stable pair. And then with the other bucket that we started with, the other $30 bucket, you would use that to just go out and buy $30 worth of synthetic Tesla stock, which makes you long $30 worth of synthetic Tesla to match your $30 short of synthetic Tesla. So now you're like delta neutral, so to speak. You're equally long and short the same amount on the volatile asset.
Just to maybe something that like maybe is helping for the understanding, like with the 1/3 of the capital, so the $30 you bought the Tesla, which you're holding right now, you could always like pay back the loan that you open up to create Tesla and sell it. So this is maybe for someone who's having a hard time to understand this is how you hedge against it, because you're already having the money that you need to pay back the loan.
Exactly. And you always are rebalanced, like as the price of Tesla moves, you're always rebalancing so that you have, basically the exact amount you need to repay the loan. And yeah, but that's basically, Santiago, as you mentioned, that's sort of the core of the strategy, is that you can exit at any point in time, because what you do to exit is you simply sell the long position to repay back your short position. And of course, the benefit of this is you have less exposure to the volatile token, but you can still take advantage of the yield and provide liquidity for that LP position. And yeah, the tricky part of this strategy for people who want to run it manually is you have to both set this up, which takes a lot of steps. Even in really any ecosystem you'd want to run this in, there's a lot of steps to set it up. But then probably the most important thing is managing the position. And so what Aperture did is we created this controller. I'll pull this up. I mean, this is a bunch of text. It's not the prettiest thing to look at, but basically we had a controller that would monitor each block the prices of the volatile token, and if the threshold we were using on Terra was if your collateral ratio changed by 20%. So if it went from 150% to 171%, or if it went from 150% to 129%, then we would rebalance to bring that ratio back to 150%. Of course, if it's less than that, if it's at like 140 or 160%, we would let it sit as to avoid unnecessary rebalancing cost or realizing a permanent loss before we necessarily needed to. But yeah, that was basically how the rebalancing works, which is crucial. You have to maintain delta neutrality throughout the history of the pool. The other part of this, though, is you need to rebalance the rewards you receive from liquidity mining. You need to put those back into the strategy. That's also something we would do, is reinvest those tokens and basically do the same thing where we would take 2/3 and set up a smaller short position and 1/3 to go long, and add that on top of what we were already liquidity mining. So this sort of has a compounding or APY like yield over time.
Interesting.
Got it.
Was there, so you said like if the collateralization ratios is set at 150%, what happened on Terra when it was lower than the minimum that was required? Because on DeFiChain you get liquidated if you stay for, I think, longer than an hour, and then you have time to fix it, and then you get liquidated. You always have to be minimum 150.
Yeah, so on Terra, the liquidation was immediate. There was no grace period, which definitely made the speed of the rebalancer really important. So on Terra, we would check basically every 5 minutes, just about. We were checking and potentially rebalancing if we needed to. And also, let me kind of pull up. I unfortunately don't have. Can you see my screen still?
Yeah.
So these strategies have all basically been sunsetted. We're keeping the UX up because there's still some TVL that hasn't left. Let me see if I can find an example, but basically, position open. Let's see if there's a screenshot. I don't think we have one, but when you open the position initially on Aperture, we had a here it is. This is a screenshot. So this is an actual screenshot of the UX, and you can see this target collateral ratio. So we on Terra set the minimum target collateral ratio actually at 200%, because you get liquidated below 150% on Mirror. And this was to create a buffer. So if there's a flash increase in the price of this, for this example here, it's Coinbase stock, Mcoin. So if there is a flash increase of Coinbase, like for some reason there was some crazy trading event and it went up by 35% in like 2 minutes, then you could get liquidated because the controller might not have caught it. But theoretically speaking, that should basically never happen. These are real world equities that don't have the same volatility risks that you have on crypto. Even Bitcoin, it would be quite crazy if it jumped by 40% in a span of less than 5 minutes. So we gave basically users some leeway here, so they could drag this slider around and they could decide how high of a collateral ratio they wanted. And this is something that would probably be tweaked for DeFiChain. We could make this lower than 200%, but we had to do 200% because you're immediately liquidated at 150% on Mirror. And also, if you're not familiar, Mirror was the synthetic assets protocol on Terra Classic. I mentioned that a few times. But yeah, so you could see the trade-off here, though. Like as you move the slider, it would tell you, as you move the slider to the right, the price Mcoin needs to move goes up. But you would also see that your total APR would go down as well. So it's a trade-off.
Yeah.
So let me just summarize that. So when it comes to Aperture, and if you show this screen right now there, right? So this was your protocol basically, where people could just come and like execute a specific strategy on the Anchor protocol combined with the Mirror protocol to earn yield, and to like just optimize how the trading should look like, and how do you want to position yourself. And for this to actually work, you need some mechanisms like the management of the vault, and also the rebalancing. And you normally did this all, like everything with the smart contracts capabilities of the specific blockchains that you use. How would you now bring this to DeFiChain?
Yeah, great question. So obviously we're open to community feedback here, but what we would like to do is the first and foremost, I think the taking a step back even before a delta neutral strategy, probably the very first thing most blockchains get after they set up the DEX, the very first like strategy you would see pop up is just a simple auto compounder that's really easy to use. And typically these auto compounders will also allow people to like zap into the position, meaning you don't even need to perform the swap to get the other token. If you just have any token you want to go into position, you zap into it, and the auto compounder will basically take, like, let's say if you were zapping into DUSD and DTesla and you just had DUSD, then we would swap half of that for DTesla, add that to liquidity mining, and then as you accrued rewards, it would reinvest those back into the strategy so that it has like a compounding yield effect. And this is something that's really crucial and like is kind of like core, in our opinion, like core infrastructure that any like DeFi ecosystem needs. So the first thing Aperture would want to do here is basically to natively build into the DeFiChain mainnet via a hard fork, basically an auto compounder that could be run, within Jelly Wallet natively, or there's some other, we could kind of talk more about how the UX experience would work. But this is basically something Aperture wants to give to the community as like a core piece of architecture as a part of this CFP. And then the next step, and that, by the way, that auto compounder, we typically like you see on Terra Classic or like with Beefy on Binance Smart Chain, those protocols will charge a fee for the auto compounding. That's not something Aperture is going to do here. To be clear, there'll be no fee for the auto compounder. We're just going to build that and give it to the chain as part of this proposal. And then the second part here would be when MetaChain goes live is when Aperture could basically recreate our UX that you see here for Terra Classic. We could create the same smart contract setup that basically powers and enables these delta neutral strategies. And although we haven't like fully decided what it would be, we did charge a 10% fee on the realized profits from these strategies on Terra Classic. So I mean, the APRs you see right now are kind of jacked up because Terra Classic is a zombie chain. But in their heyday, it was like 40% APR. So if you put in $100 and after a year you had $140, Aperture would take $4 basically.
Yeah.
And that goes to manage the front end, manage the the AWS servers we have to run to manage rebalancing, and of course Aperture also would eat some of the fees associated with actual rebalancing, as there's some swaps you have to perform. So that APR really is the fees we're getting are to really just to help sustain the the strategy and the protocol itself.
Yeah.
But yeah, that's sort of our vision. Does that seem clear, Ben, Santiago?
That's really cool. I mean, when it comes to the auto compounder, which would be the first step for your vision, how would this have a difference if we look at the Vault Maxi or at maybe the DeFiChain Wizard, which are going into the same direction to having a bot that is constantly monitoring your vault and is able to manage your vault and like refill or like take something out of the collateral, and also is also capable of reinvesting. Like, how would this on-chain native thing look like? I mean, I know that like you're not the tech lead in your team. Sadly, they hadn't the time today to come to the show, but maybe you still have some explanations. Like, what would this look like natively?
Yeah, so there's like two different. Well, probably the main differentiator here is that this is going to be very user-friendly oriented. So our target users are basically people who are not skilled enough to run these strategies on their own, and or people or institutions who don't have the time to manage like a complex system of bots and like daily monitoring that is needed to rebalance things. These strategies are set up to be set it and forget it. And that includes both the auto compounder. Like if you were to natively start liquidity mining on DeFiChain with the auto compounder we have, it would be set up so that you can basically know that the rewards will automatically be compounded back into the LP position. And same thing for the delta neutral strategy, which would interact with MetaChain. It'd be the same experience. It's a very simple one-click set it and forget it setup that's going to be attractive to basically new users who aren't in the DeFiChain ecosystem, and also probably current users who want to run one of these strategies but don't want to have to manage it daily. So I would say first and foremost, UX and like ease of use is the most important But then also, like, I guess specifically, yeah, I guess that's really probably the most tangible benefit. I can get into the technical details, but I think for most people, you could see the benefit of one click versus having to like set up your own AWS server and like connect it to Telegram and then like run these like command lines to tell the bot how to rebalance things, which I think is how the Vault Maxi program is set up.
So maybe one thing which the community is very interested in when you say hard fork, and normally this is done by the core development community at DeFiChain. And I think something that we can mention is that we already brought you in contact with Prasanna. And I think there will definitely also, when this is going to happen, there will be code reviews. And it's not that you hijack DeFiChain or anything like that. I mean, I guess some people are worried when they think like there's somebody I've never heard of and it's talking about a hard fork of DeFiChain.
Yeah. I mean, we definitely would work very closely with Prasanna and the rest of the team. But, the idea is like we would kind of basically be like an employee of that team whose task is to build an auto compounder, and we would submit that code to the team, and you would review it, and it would go through the same kind of code review process. Before being hard forked. Also, as mentioned, part of the main point of the CFP is to actually offset the cost of getting it audited. So for people who aren't familiar, like in EVM DeFi world, anytime you do any update to a protocol or project, you have the code audited by a third party to make sure there's no vulnerabilities or errors in the code. And so it's basically like an additional external set of eyes to make sure the code is up to snuff. Aperture's gone through 2 such of these audits with our Terra protocol. So we're quite familiar with that process. But yeah, and our core dev team is very strong. Like these are very senior engineers that came from Google, and they have experience writing in C++ as well as other programming languages that are more common in like the EVM or Solana world. So it's a very strong developer team that would be approaching this, and there would obviously be lots of sets of eyes on this code before any kind of hard fork was even considered.
Got it. I mean, the whole project has a lot of milestones, right? And you're starting now with the core functionality, and then you want to go into your own protocol and building this. And also, I think your team in general will probably need also some time to get all the details around how is DeFiChain working. And I know that you already did a lot of research and you're familiar with the US dollar and the proposals around that, but it's not like you jump in and after like 2 weeks you are like the DeFiChain expert, like compared to those people who are already in the space for 2 years. But maybe for the last point, I think it's really interesting for people to clarify. How would you see the protocol in the end, or maybe also even the auto compounder, have the positive impact to the US dollar? I think this is people are really worried about now. And if you could maybe explain this a little bit, this might be interesting for the people.
Yeah, I mean, the auto compounder by itself is value additive. It's a core automation tool that is crucial for any DeFi ecosystem that will attract some users. But really, the cake here is the delta neutral strategy and having a simple one-click and invest user interface that allows people, from MetaMask wallets to enter these strategies. They don't need to set up a new wallet. They don't need to even swap and get DUSD initially. They can show up with USDC or UST, and Aperture would be able to swap that into DeFi or DUSD for them natively. And so what this would do, though, is like to enter, like if you see on the screen here, those synthetic stock positions, to enter those positions, you need to farm them against DUSD. And so there's going to be buy pressure on DUSD, as we will be, as I mentioned, on that short position. When you mint the synthetic stock token, you're then going to swap it for DUSD. So that alone is going to create, buy pressure on DUSD. But really, more importantly, this creates a strategy and an entry point for the broader DeFi ecosystem, which has, there's billions of dollars in TVL on Binance Smart Chain and Avalanche and all these other Ethereum chains, and those users will now have a really rare strategy that we have not seen replicated outside of Terra Classic. They'll have this strategy, and DeFiChain could be really, unless something pops up out of the blue here in the next few months, this could be the only place where you can run a delta neutral strategy on synthetic stock tokens, which I haven't touched on this yet, but synthetic stock tokens are, the mechanism of this strategy can be done on synthetic crypto or on crypto assets as well. And we do have these strategies, but crypto is very volatile, and volatility ultimately triggers these rebalances, and these rebalances impact the APR. So these strategies are super attractive both for retail and institutions when they can be run against more stable real world synthetic stock tokens. And that was the reason we got like 120 million in TVL on Terra Classic. We had very large players like Celsius who had over 10 million invested in our protocol, and they wanted to put even more in. But of course, the DeFi started before I got a chance to do that. But yeah, these strategies are super attractive on synthetic stock tokens. So I really want to emphasize that this is a really big opportunity for DeFiChain to take advantage of the fact that you're currently probably in all of DeFi the biggest place to get synthetic stock tokens. So therefore, you have the biggest chance to capitalize on that demand for a good delta neutral strategy.
That's super interesting. Super.
Super cool.
I'm super happy to actually hear that, because this is like what the people are always waiting for, right? That someone comes here to like use the advantage that we have synthetic stocks, and we are the only one, like some kind of the only one who are having the variety of all those tokens, and someone who actually wants to build with that. So it's pretty cool. I think that for the people, it would be really interesting for you or maybe your tech team. We don't need to cover this today because we're already 40 minutes in the video. You could maybe set up a paper or just on Reddit comment like why this Aperture needs a hard fork for the auto compounder compared to Volt Maxi, and like just for people to understand like why is the hard fork required and what are the benefits out of this. So I think this is something that people, especially some core community members, they would really like to have a look into, like what is going on over there. But yeah, I think this would be better if we cover this maybe in a written form, or I think this would be probably too long now.
Yeah.
Ben,
just one last thing. I mean, what I find really interesting. So I look at this very much from a business development perspective, not so much of like we have something like that already on DeFiChain. And what rings a bell for me is when you say that you open up like this whole opportunity of delta neutral strategy to like an insane big customer base. And also you made experience with that, and you bring this in as well, besides like the engineering component that Aperture Finance has. You also have the approach to how to sell this on other platforms. And I think that's really valuable and something that the community I think will appreciate and should appreciate, because I think that's what we're looking for at the moment, especially in a bear market, is that we get players that are experienced in DeFi to build on DeFiChain. I think that's exactly the story we were talking about a month ago when Terra Luna crashed. It's like we need to get people that were building on Terra Luna on DeFiChain, and I think you're basically you're the story that shows that there are companies around that build on Terra and obviously cannot do this anymore, and now still think there are other exciting opportunities. And I think that's for me really cool. I mean, to hear that.
Maybe what's also cool, which we didn't mention today, I mean, you have already a community in place, right? You said you have like 8,000 people.
Yeah, there's like, I think 8,000 or 9,000 in our Discord. We had over 6,000 unique wallets invest into our strategies on Terra Classic. So there's already a pretty solid user base there, including a lot of institutions in Wales, as we had many positions over $500,000 on the last Terra strategy.
I guess also the community was not blaming you for the downfall of Terra, right? So your brand didn't really suffer that much from what happened, because you're basically just were running a protocol that was was getting like crushed by the crash.
Yeah, exactly. I mean, Aperture and the people who use us know that we're a tool to get yield on other ecosystems, but ultimately at the end of the day, Aperture is not responsible for the protocols we build on top of. We can try to do our due diligence to make sure they're stable and safe, but we can't help if the whole ecosystem has a death spiral. That's
sure
beyond our control, and people realize that.
Maybe one last thing: what's going to happen if the CFP gets rejected? Let's not think that is going to happen, but we hope with this video you could clarify a few things. I feel like I know a lot better now, which I already did. Like we've spoken a lot, but I'm also not the technical guy in our team. But every time you explain it more, I understand better what you guys are trying to do. So I think it's a really cool thing. But yeah, what would you guys do? Like, are you then giving up on DeFiChain, or what is the plan?
Yeah, that's a good question. I think if the CFP is rejected, we might go back to the drawing board and kind of reevaluate and see how much we want to prioritize this, if at all. But yeah, I'm not sure. I mean, I could see there's multiple scenarios. Maybe if DeFiChain launches and DSD repegs and you get to 50% collateral backed on DUSD, and the stabilization fee is gone and the ecosystem is doing healthy, and 6 months from now and DeFi, Metachain is up and live, then maybe we would reconsider coming back in and building. But yeah, it's hard to say. There's a lot of other strategies we're looking into, and we're trying to prioritize our internal resources accordingly to be as capital efficient as we've taken the big hit when the Terra depeg happened, and we're trying to last as long as possible so that we can eventually one day have our own token launch, but we need to make sure we have good strategies and are managing our budget accordingly until then.
Got it. Cool. That's very, very cool. I mean, that was a good question, Ben. I was about to bring this up as well. And yeah, guys, I think we are now like 40 plus minutes in. I think it's a lot of information. I think that also many people can then now imagine something when they see at Aperture Finance. And I think it will take time for the people to get to know you, or maybe for you also to get to know the community. And we just hope that we, with this video, just could provide a stage, and you could just like explain what you were maybe not able to explain within just the Reddit post. So yeah, I think thanks very, very much for your time, David. And yeah, I think we got it from here, right?
Awesome.
Yeah. Great having you on the call, man.
Likewise. Thanks, y'all.
Have a great day.
Bye.
Bye-bye.
Bye.